if ready. And what time is it now? 9:02. Oh, we got another one entering, so I'm at least let her come in. Oh, there's another one. Oh, Tamara Odell. That's another financial professional person too, isn't it?
I don't know.
Don't know. Okay. I feel like it is.
Odell of Odell's?
Not Odell's. I think Odell and Associates or something is like a small CPA firm, but
Ah,
I'm
okay.
certain of that. Welcome, Leisha. Um, we're at 9:03. And so I'm just going to go ahead and get started. I expect a few more people will trickle in here. Um, I'd like to just kind of start by saying thanks for joining for this webinar from Geneve Huxley of Huxley CPA and Consulting. I've known Geneve since she first started her practice, which was probably 5 years ago now or more, seven.
5.5, yeah.
5.5. Okay. And really found her to be a really capable advisor to small business, especially those growing into their next level. So excited to have her share this presentation today. Geneve, I'd welcome you to introduce yourself a little bit more fully if you'd like. And then we'll just get going with the content. Oh, and kind of set the stage as far as questions and stuff too.
Sure. Hi, everybody. My name is Geneve Huxley, as Kurt said. It can be a difficult name to say, so I will first say, if you're not sure how to say it, think of Geneva in Switzerland and then take the A off the end. Geneve. Sometimes that's helpful as a reminder to folks. And I've got as a second slide, I've got more of an introduction about me. So I'll go over that in just a minute. For questions, a lot of those come up, and so I want to be able to address those as they come up. If you want to put your questions in the chat box, Kurt will monitor the chat box and then chime in when I take a break and check with him and let me know if there's any questions, and we'll get them answered at that time. So feel free to chime in with those, and we'll try to address questions before we go on to each next one. So today I'm going to talk about 10 business problems lurking in the shadows. And as a fractional CFO, I started seeing some recurring patterns with many business owners that were unaware of certain financial risks in their businesses. So I developed this training to cover 10 of these risks so you can prevent that unknown from costing you money. So a little bit more about me. I offer my clients transformational business advising. I'm a highly accomplished senior executive, CPA, C-suite officer, consultant, and a community board member. I have volunteered with KUNC, the local NPR station, BSA Scouts Adventure West Council, and currently I'm the chair of the Larimer Humane Society as well. I'm also on the Colorado chapter board of the Private Directors Association. I have 25 years of success in accounting and finance, including working extensively with and in small businesses. I've been honored as a notable woman in accounting by BizWest, and leveraging my extensive experience in strategic planning, process optimization, organizational development, I am a valuable partner to my clients. My broad areas of expertise include financial analysis, forecasts, and reporting. I am based here in Fort Collins, but I do serve clients nationwide. So if you're like most people, you started your own business because you love to do the service that you're going to be selling. Likely none of you started your business because you love bookkeeping, accounting, or taxes, or writing procedures. Becky might be the one exception because she actually has a bookkeeping firm, accounting firm. So a consultant company loves to help business owners, marketing companies love to create marketing strategies, and engineering firm loves to build beautiful and efficient buildings. So at first, business owners really do everything when they first start the business. They have to do the marketing, they have to do the sales, They have to deliver all the client services. They have to do the hiring and the bookkeeping. They really do everything all in one. And I'm sure you can all relate to starting that way. But as your business grows, it really changes. And those problems really love to lurk in the shadows. The biggest problem is that you don't really know what you don't know, and you're not even sure you know the right questions to ask. I hear that a lot from companies that I talk to and clients of mine. At some point, the business grows enough that you're going to need to start hiring experts to continue growing your business. Today, we're going to cover several of those problems and issues that many business owners don't know that they have. You have to be careful with these questions because they can cost you a lot of money, or they can cost you trouble with the IRS, lawsuits, a variety of different things. The first one I want to talk about is whether or not you have employees or 1099 contractors. A lot of times I hear business owners say, I don't hire employees. They are all independent contractors or 1099 employees. Well, the first thing to know, a 1099 employee does not exist. It's either an employee or it's a 1099 contractor. 1099 contractors, they generally cannot provide the key services that you sell. And there's one exception to that I'll say in a minute, but they can't provide the key services that you sell. And 1099 contractors are also not exclusive to you as the business owner. They can provide those same services to other businesses. So the one exception in having 1099 contractors provide the key services you sell is if you're making payments to a business rather than an individual person. Like, for example, my clients make checks payable to Huxley CPA Consulting. They do not make checks payable to Geneve Huxley. So if that's your situation, then it's okay to have contractors provide the key services that you sell. The IRS says that the general rule is that an individual is an independent contractor if the payer has the right to control and direct only the result of the work and not what will be done and how it will be done. So small businesses should really consider all the evidence of the degree of control and independence in the business worker relationship. The facts that provide this evidence fall into kind of three basic categories: behavioral control, financial control, and relationship. The IRS says contractors have agency over the what and the how. So behavioral control, that's the right to direct and control work. So let's go through a couple of examples here. Can you dictate this to a contractor? Can you dictate when and where to work? I can't see any hands or anything actually raised up. So you actually cannot dictate when and where they work. What about tools to use to get the job done? Can't do that either. How about detailed process instructions for how to do the job? Can you tell that to a contractor? Nope, you can't. How about an evaluation system, how their work is done and completed? Can you do that? Can you dictate that to a contractor? Nope, can't do that either. And how about training? Sometimes you want to train the contractors to do it, a certain way for you. Can you dictate that to a contractor? Nope, can't do that either.
So, can I ask a question?
Yes.
So my facilitators are contractors, and I'm going to be training one tomorrow. We do surveys of our members to see, but we do pay an entity. Typically, they all have their own business that does other things in the community or business consulting or whatever. Am I okay?
So if you are paying a business, that is the best thing you can do when you have a contractor. That puts you on the safest ground with it. If you're making payments to a consulting company, an LLC, and not to John Smith, the person, then you're on pretty safe ground. So you're
Even
okay
if
with that.
even if I tell them when and where to work and give them tools to use and detailed instructions.
Because it's a business. There's no,
Okay.
a business itself can't really be an employee. Only
Okay.
an individual person can be an employee, not a business. And so that's how they delineate that.
Sorry for the squirrel chasing. I was just starting to get a little nervous there.
Yeah. Right. And it really, it depends on, I mean, a lot of people have to think about their particular circumstances, but if you're paying a business, that's the safest ground you can be on, and they can provide the main services that you provide. Are there any questions in the chat on this?
I didn't see any other chat questions yet, so
Okay.
go ahead.
All right. Next piece is financial control. For an employee, generally the services are not available to other companies. The employee works for you, they don't work for anybody else, especially if they're working for you full-time. There's part-time situations, of course, but the services they provide are generally not available to other companies. You provide a regular wage. There's no equipment that that employee has to buy. The company provides all of the equipment they need to work on. And there's no personal profit or loss risk for an employee. They will always get paid the wages for the hours that they worked, and there's no chance that they're going to lose money in that deal. Conversely, with a contractor, the services are available to other companies. Generally, you pay a contractor per contract or a flat fee. They do have to provide their own equipment, and they do have personal profit or loss risk. If they don't bid a job properly, they could lose money on it and have their expenses exceed their income from what you pay them. The third piece is relationship control, or is the relationship, I shouldn't say control, relationship in general. With an employee, it's kind of an indefinite relationship. Things continue on until the employee or the company decide to terminate that relationship. But there's no defined time period of 1 year or 6 months. That employee can be responsible for key activities of the business that you sell to other people. There's generally not a contract with employees, and benefits are usually provided: insurance, health insurance, dental insurance, pension, maybe vacation plan, things like that. In the case of a contractor, it's usually a very time-bound situation. It's a project-based relationship. The contractor is responsible for the non-key activities of your business. There's usually a contract, a legal contract that you sign, and there's no benefits that are offered to that contractor. A few other items to consider is, how was the job obtained? Did you put out a posting trying to solicit resumes for the job? That would lead to an employee. If you contacted people and got a request for proposal from them and made a request for proposal from them, that would be on the contractor side. If there's a job title, that is something that would that kind of yields to, is this an employee or a contractor? Generally, contractors don't have titles at your company for sitting in a position at your company. And one option if you're really stuck with kind of your situation, there is some IRS help. There's this form that I've got on the screen here. Don't submit the form to the IRS, but what it does is it's got a few pages of detailed questions. And really what it comes down to is, if you think about kind of setting up a piece of paper, and on the left side it's employee and on the right-hand side it's contractor. And so what you need to do is go down kind of all the different preponderance of items. And some items will probably lead to employee, some items will lead to contractor, but it's not usually a super cut and dry type of a thing. So you have to line up kind of all of your situation, all of the pieces of your situation, and see if the preponderance of evidence points towards it being a contractor, or the preponderance of evidence points towards it being an employee. This IRS form can help walk you through those different questions that I've talked about here, and pointing out some of those areas. But again, don't submit the form. It's just a checklist for you. Any questions on that have come up? Okay. Perfect. All right. Problem number 2 is not properly mitigating risk with your first hire. You should create an employee handbook right up front before you hire your first employee. You need to cover all the needed policies and expectations. What's their vacation leave? What's the sick leave? What are the pay days? Do they get paid every other Friday? Do they get paid twice a month? You'll have your anti-harassment policies in there, descriptions of benefits, perhaps working hours that you expect people to work, especially if you're in a remote workforce, if you have a remote workforce. Another item is getting that workers' compensation insurance. You want to get that right as soon as you hire that very first employee. And check whether it can be done through your state or if you need to have a separate insurance carrier. In Colorado, there is no state fund. You do have to find an outside carrier, but that varies state by state. And then when you go to hire employees, have all your employee hiring documents in order the day they start. You need to complete an I-9 form, which certifies that they are legal to work in the United States. You want to have them complete a W-4 form because that tells you how much you should have withheld from payroll for them for their income and federal and state income taxes. This will also help with your payroll service provider when you set up. You also maybe need, a voided check for direct deposit for the employee when they get paid. So you'll need a variety of documents, but be sure you have all of those completed. Your company also likely has to register to do business in each state that your employees are located in case you have a remote workforce across the states. State income tax you have to register for. There's a withholding number for that. There might be some local taxes, local jurisdiction taxes that get paid. If you hire somebody within Denver proper, there's like a Denver opportunity tax that employees have to pay. There might be a potential income tax for the company when it comes to registering employees in that state. But you want to get all that stuff in order and taken care of on the front end when you first hire. I want to give a story here about I worked with a company that was hiring a new employee out of state. And I said, okay, great. Do you have their I-9 information and that ready to go? And they said, the what? I said, the I-9 information. They said, we haven't had to do that with any of our other employees. And I said, actually, you have, and we'll fix that in just a minute. But yes, you need to have an I-9 form completed for everybody that works for you. So I found at that time that they hadn't done I-9s or hiring documentation for any of their other employees, despite being in business for a number of years. So that's why one of the reasons that I have this on here, it catches some people by surprise. All right. Problem number 3 is not filing annual property taxes. Most counties and states require an annual property tax filing, even if you don't own any real estate. You pay property taxes on the value of all your fixed assets, your vehicles, your company computers, the company desks, the furniture, all of that stuff. Some counties may have a de minimis threshold, so you don't have to list, the toaster that you purchased at the office. But most counties all have property taxes, and that is something frequently that businesses miss out on and are not aware that they need to file. There's not a very good mechanism in the counties to really capture the new businesses that register. It takes them a few years to kind of catch up to new businesses. So it's good to have that straightened out on the front end so you don't end up with any late filing penalties at all. Problem number 4 is not properly calculating, withholding, or remitting your sales tax. So sales tax should be, if you're selling goods, tangible items that you can touch. In Colorado, it generally does not apply to services. In most states, it generally does not apply to services that you sell in states, but it can depend upon a given state and county and city. The sales tax that you need to withhold is based on the delivery address, not where your brick and mortar is, not where your headquarters are. It's the house or wherever you deliver or ship your items to. You can have state sales tax, county sales tax, city sales tax, and maybe special jurisdictions. And that can turn into multiple tax returns for example, in our lovely state of Colorado here. In Colorado, we have what's called a home rule state. And what that means is each county and city and a state can have their own specific rules about what is taxable, what sales tax should be applied on, and what sales tax should not be applied upon. And what that means is they also each have their own separate tax return that you have to file. So if you're a brick and mortar business in Colorado, and let's say you make 5 sales to 5 different addresses in different counties in Colorado, you could actually, unfortunately, have up to 20 different tax returns that you need to file. So you would need to file one for the state for all of the sales. Then you would need to file one return for all of the counties that you delivered to. Plus, you'd need to file potentially a return for all of the cities that you filed to. And now I've run out of fingers to explain how many that is. And special jurisdictions are things like there's some down in the Denver metro area relative to building the stadium or the arts and cultural district, additional sales taxes down there. So this can really be quite a nightmare for business owners, small business owners especially, because it can be so onerous to do it. So I highly recommend that you use technology. There's Avalara and there's TaxJar. There's a few that are associated with Shopify and some of the online commerce websites, but having a good bookkeeping, accounting, outsource or internal person that knows how to charge sales tax and follow that stuff is really imperative to be sure you do not trip up with these.
That was going to be my question, Geneve, is the easy buttons, technology solutions, and also on the employment side, like if I don't have an HR manual or my employment forms in order and want to deal with that, are there easy buttons there as well?
So for an HR perspective, for employee handbooks and things, the best thing for that is to hire an outsourced HR person. And I know a few that I can recommend for you guys. And they can help you get a handbook in order and get updated. They can help keep you updated on any changes in laws that happen. That's the closest thing to an easy button from an employee handbook perspective. But for the cities and the sales tax perspective, really it's using technology to track all of your sales and outsourcing somebody to help file all the returns.
Okay, thank you.
You're welcome. The last thing about sales tax is that economic nexus can be outside your home state. The general threshold is $100,000. So nexus is the word that we use to say, do you have a presence in another state such that you have to start collecting and withholding and remitting sales tax to people that you sell to in that state? It used to be just not even that long ago, 10 years ago, that what would cause you to have economic nexus in a new state would be if you had fixed assets in the state, if you had employees living in the state. That would sort of establish your presence in the state, and you'd have to start withholding and remitting sales tax on your sales. However, there was a Supreme Court case a number of years ago. I want to say it was 2017 or 18 with Wayfair, the big online furniture retailer. And they, one of the states said, hey, you need to be remitting sales tax for people that you're selling to in our state. And Wayfair said, no, we don't. We don't have a brick and mortar store there. And it went through the whole court system all the way up to the Supreme Court. And they lost. So basically, Wayfair lost for everybody. It messed everybody up now. And basically, it came down to the fact that the Supreme Court said, you know, commerce today has changed drastically from what it was 20, 10, 20, 30 years ago with the internet. People can order things online and have them shipped to their home. It's very different than it used to be 20 years ago. So what they've developed now is something called economic nexus in a state. So what that means is if you have a state outside your home state where you're based, where you have made sales equal to a threshold by that state, generally states are starting to adopt this $100,000 rule. So if you've sold more than $100,000 of goods to another state, that means you have economic nexus in that state. That $100,000 resets every year. It's $100,000 in a calendar year. And so if you have economic nexus in that state, it means that you need to collect and remit sales taxes on all of your sales in that state. So they kind of Wayfair messed it up for everybody. Now it's more of a nightmare for everybody. But one of the nice things about technology is Avalara and TaxJar, these tax programs, if you run all of your sales through them, they'll actually keep track of what your tallies are in each state and alert you when you're getting close to needing to collect and remit sales taxes.
Geneve, I don't have a question, but I thought I'd just do a quick time check. It's about 8:28.
Okay, perfect. Thanks.
Cool. Oh, I got a question here. If a company collects sales tax in other states, what do they do with the tax they collected?
You have to remit it to the state. So what happens is when you are hitting that threshold in another state, you need to apply for a sales tax license in that state, get a number. They'll give you an ID number because they all need to have their own number. They can't just use one number like the federal tax ID number and use it for everything because that would be too easy. And so you have to apply for that sales tax license. And then you would fill out a tax return form and mail in a check every year or do it online.
Clarifying question. It's before they hit Nexus. What about then?
Before you hit Nexus, you don't need to collect the sales tax. So really the struggle is that you need to kind of estimate at the beginning of the year if you think you're going to be hitting Nexus in a particular state, then you should probably start withholding earlier on. So you do it throughout the year, but it can be a little bit of a guessing game.
Yes.
If you wait until, maybe you don't think you're going to do it, and then August you get a big sale, you can then say, okay, it's a big sale and in August, okay, now we're really definitely going to hit the threshold, then register at that time and start withholding at that time and go from there forward.
But then you have to pay sales tax that you didn't collect potentially on those previous sales?
Potentially. I'm not certain on that, actually. I should have said at the beginning, taxes are, despite my discussion of taxes in the last couple of slides, taxes are not my specialty. I haven't done taxes in a long time, and I'm actually not certain if you need to go back and remit some of that. It may depend upon each particular state's rules. So I'm not sure. So I will encourage you to talk to your tax advisor.
Have free money. That sounds nice.
Collect it and have free money. That's not the way to do it. If you collect it, you do have to remit it. Yes. Okay. And the government wants every stinking penny. If you collect it, and if you over collect from people accidentally, you have to remit that to the government as well. You don't get to keep that. So
or give it back. Okay, thanks.
Sure. All right, problem number 5. Losing money on service lines and products. Do you know how much it truly costs your business to provide each of your service lines and products? The way I've usually seen it with companies is they've got one P&L, one income statement that shows all of their services that they offer, and it gets down to a bottom line, and they'll look at the bottom line and say, great, we're profitable. This is awesome. But what they don't know and don't have insight into is if they provide, 10 different services, it could be a case where 7 of those services are profitable and 3 of them they're losing money on. And if you don't know how much it truly costs you to provide each of those 10 services, then you don't know which ones are costing you money. Because if you have once you know how much it truly costs to run each of those service lines, you'll know which ones you're losing money on so that you can either raise your price or decide to stop offering those services and readjust things to make it so that you're more profitable. And that drops down to your bottom line. which services are profitable. Also, how do you determine that sales price? When you look at, how much it truly costs your business, did you include overhead expenses in that calculation? Did you include a profit percentage when you built that cost structure? So there's a lot of different pieces on here that I think some business owners are not aware of that I've seen. A cost analysis is something that can do that. It goes straight to your bottom line because you know exactly how much it's costing you to offer each of those services. This is a service that I provide with my company. I've had several clients hire me to calculate this. One manufacturing client had the results were where 2 were profitable, a third one was not making the profit, and the fourth one was really great profit. So she stopped making the losing product and focused on the higher profit one there, and she increased her bottom line very quickly.
Yeah, I was just going to ask, is the same, can you replace service with product?
Yes,
there?
service or product line too. It's product lines. People that are doing selling products generally actually have a better feel for what it costs them to truly sell because they've got to purchase it from somewhere and they have some added things in. So they're kind of used to working with inventory and adding those costs in. With service businesses don't really think that same way. And so it's more of a something more lurking in the shadows, so to speak, on a service business than a product business. But yes, all is this is very true for products as well. All right. Problem number 6 is not having a plan to raise your prices. You really should be considering what triggers a price increase. How much should you raise it? How often should you raise it? And how do you communicate to your customers? If you don't have a plan to raise your prices each year or on some kind of recurring basis or having a trigger to increase your prices, what's going to happen is, you sell your prices for this, it costs you this much. And if your suppliers are increasing their prices, it's slowly eating away at your profit. Before you know it, you're going to be losing money. And so it's really good to have a plan for when you're going to increase prices. One of the things that I have found as well that people don't always think of is people will want to keep their price the same for as long as possible and then have a jump. That's actually a lot harder for your customers to kind of stomach at the time because it's a much bigger jump at one time. Maybe it's 30% in 1 year. You're a lot more likely to lose some customers, where if you have small incremental changes all along the way, they get more used to it. They can build it into their structure and into their budgets. If you like say you mostly deal with companies that are probably have a calendar year end, they're probably doing their budgeting in the fall timeframe for the new fiscal year, their new calendar year. So if you notify customers early on in September, October about price increases, they can then build that into their budget and they know that it's coming, and you're a lot more likely to retain that customer. You also should talk about the value that you provide to your customers with your products or your services when you're communicating a price increase, because most likely they're with you and they've hired you for the value that you provide, not just because of the price. So factor that in and keep that in mind to really communicate and remind them what your value is when you go to communicate a price increase. Problem number 7 is not getting W-9s from vendors before the first payment. This is something that is usually an afterthought in January when your bookkeeper tells you that you're missing a bunch of W-9s from your contractors because, and you find that out because you've got to do reporting on 1099s by the end of January each year for the prior calendar year. So it usually ends up being a big scramble in January for companies. They're trying to get in all these W-9s from companies, and it can be sometimes hard. People are elusive and they won't give you their W-9. It really is such an easy thing to do. When you first set up a new vendor in your accounting records, one of the steps to set up that new vendor should be to get their W-9 and put it in the system and require a W-9 before you make the first payment to them, because then you have a carrot. Hey, I would love to pay you, but I really need your W-9 first. then it's people are more likely to give you their W-9 because they want to get paid by you. But once you pay them, you've kind of lost all your carrots and you only have a stick, but you don't even really have a stick. You have a begging, please, please, please send me your W-9. So this is a really easy thing to do, just a little bit of planning ahead if you do it on the front end when you first have a new vendor that you hire. I want to pause and see if there's any other questions that have come up that anybody has in the chat or anything I can clarify.
Okay, for now, I got one. Pricing.
Yep.
After you have determined the cost of doing business for your product or services, what is a competitive yet appropriate percentage over cost of doing business to ask?
That varies widely by industry, very, very widely by industry. It's so I can't answer that question, and I don't have all the industry percentages off the top of my head. You know, I can tell you restaurants and bars have a really, really thin profitability. They have just a few percentage points in profit at the end of the day. Then you have things like software companies. Maybe they developed software years ago and they're still selling it. They could have, you know, a 40% net profit margin, not even a gross profit margin, but a net profit margin. So it really depends on industry. And I encourage you to, a lot of times there's industry associations that can have some comparable data. I've got several benchmarking websites that I go to find that information for clients if I'm looking for it. So I can pass those along if you'd like.
And also the library. The library has a huge database, so you can compare yourself to others in your industry. And ultimately, that's going to be one of your biggest guides is what do I look like compared to others like me in other places of the country.
Right. Oh, great. I didn't know that the library had that. Thanks for that.
Yeah, if you got a library card, you got a ton of database information available.
Yeah, that's awesome. Anything else? All right. Problem number 8 is incorrect recording of loans that you have. The principal and the interest dollar amount actually change monthly. If most of us are probably familiar with either a car loan or a mortgage, a house, a home loan. And while the payment, the cash that goes out the door is fixed every month, what's not fixed and what changes every month is the amount of principal and the amount of interest for each of those payments. The principal portion to be repaid, that needs to be a liability showing up on your balance sheet. And it should only be reduced by the amount of the principal payment that's made every month. The interest, including any fees, should be expensed every month. And how do you know how much is principal and how much is interest? An amortization schedule can help. That's usually something that's provided by the lender. If it's through a bank, if it's a car or a home, it's through a bank, you'll have an amortization schedule you can look at to see the breakdown between principal and interest each month and track that along to be sure that you're matching to what that is. For interest expense, you need to calculate the actual financial interest, including all the fees. And you may need to make your own amortization schedule or have one prepared for you to know what the actual interest rate is that you're paying and what the interest portion is for each payment. And here I have to give a little cautionary tale to be wary of predatory lenders. There are shark loans out there that are they might as well come break your leg if you don't pay it, because they are really, really difficult to get out from under at your business. Cabbage is the name of one. Intuit Loans is one. That's not nearly as bad as some of the other ones, honestly. But they're very short-term loans. And the trick is they talk about, it's only 15% interest, which may not sound too bad. It's high, but you really need the cash. But then they'll have, a daily fee or a weekly fee or, a processing fee on the front end. And from an accounting perspective and how to look at things overall, you have to add in all those fees, those daily fees, those weekly fees, those sign-on fees, everything else, to really get what that true interest rate is that you're paying in order to obtain that money. And I have a situation where I was working with a business owner and they had a few of these predatory loans on their books. and they didn't have an amortization schedule. So I went in to calculate with all of their fees and everything in it included. And the final calculation is they came out paying 48% interest. Yes, 48% interest is what they actually ended up paying on those loans. And because it's so disguised, business owners don't really know what they're getting into. So you really have to be careful of that stuff. It can be a nightmare. The other reason I'll say that it's important to get principal and interest correct on here, on your books, is because if you're pushing the entire payment to interest expense, and you're getting ready to wrap up your year, and you think, okay, I made a profit, this looks good, and you've made your tax payments according to what that profit is that you think you've got in your business, then you give your file to your tax person, and they're going to compare your the loan balance with what's on your balance sheet, and they're going to adjust it, and they're going to pull out this huge chunk of interest expense where you classified it and put it back on your balance sheet. Well, that's good in that it makes your profit go up and you're more profitable, but that means you could be underpaid on your taxes throughout the year because your income, your net income, ended up being a lot higher than you expected it to be. So, and conversely can be true as well. So you don't want those surprises at the end of the year, especially when it comes time to do your taxes. So it's really important to get this piece correct. And I see it wrong on books all the time. All right, we're in the home stretch here, guys. Problem number 9 is lack of proper internal controls. It's really important for small businesses to have internal controls. You really should not rely on trust alone. Some key pieces of what you need to do, and this is just very high level, you need to separate responsibilities between employees. You may say, I only have one part-time accounting person, bookkeeping person. I don't have anybody else that's doing bookkeeping. Well, you can actually use people outside the accounting department to help you separate those responsibilities for internal controls to get them correct. What you really want to do is for each of these 3 pieces, you don't want somebody to own all 3 and to do all 3. So whoever has access to the general ledger, that's your QuickBooks, your Xero files, your accounting records, should not have access to your cash or your payments. They should not be the ones to open up the mail. They should not be the ones to pick up the mail. They should not be the ones to put the checks together after they've been signed and send them out. All of that's considered cash and payments, and they can doctor those documents and steal from you. So you want to separate those 2, and you also want to separate reconciliations if at all possible. You definitely don't want somebody to have all 3. So if they have 2, you want to keep the other one outside. But it's really important. I think the biggest 2 to really separate are the general ledger and access to your cash and payments. The reconciliations is like your bank reconciliation that you see looking at the bank statement. And a note to the wise, if you have a bookkeeper, maybe it's an outsourced bookkeeper or an internal bookkeeper that says, hey, I'll take care of all the bookkeeping and I'll print the checks. I can even sign them for you so you don't have to worry about any of that. Don't do that. Don't do that. It's a bad idea. Any good bookkeeper would not want to have access to be able to sign checks, move money without your signature on it. So don't do that. It's just, you work so hard to get the money for your business. You don't want it leaking out the side door to somebody else who's stealing from you. Yes, Kurt.
If I outsource my bookkeeping, generally they'll have access to both the general ledger and the reconciliations, correct?
They will have, yes, generally speaking, they'll do reconciliations in general ledger. However, a good bookkeeping accounting firm will not have access to cash or payments. They may have view access to your bank account. That's okay, but it has to be view only.
Yep.
They should not be able to send wires. They should not be able to set up payments to go out. They should not have signatory authority on your bank accounts at all.
Can't issue checks, all those things. Okay.
Can't write that. I mean, you can have them print the checks, but then they need to go to you, the business owner, for signing. And then you need, once you're signed them, if you don't want to put them together with the stubs and everything to stuff them in envelopes, you need to give them to your office manager or your receptionist or somebody else to stuff them, your executive assistant, who does not have access to the general ledger, and have that person send them out.
And Becky chimed in and never, ever, ever have a signature stamp.
Oh, yes, that
I
too.
added the
Good
two
point.
numbers, but
Yes, Becky, very good point. Don't ever have a signature stamp. It's bad news. And small businesses, you just generally don't need it. You don't need it. You're not cutting such a large volume of checks that it needs to happen that way. There are ways you can do electronic payments with the bank where it takes two people. It's called dual authority to release payments at the bank. I also want to say here, this is a very, very nutshell, tiny piece of this. I actually have a whole entire separate training on just avoiding fraud and internal controls by itself. So it's much deeper than this, but this is the high level of what's really important to pay attention to. All right. The last piece on this is management oversight is critical. You cannot turn a blind eye. You need to be reviewing things. You need to be asking questions. You should see all the money that goes out the door of the company, all the money that comes in. You need to keep an eye on things. You can't just check out on the accounting side. It's going to cost you. All right, problem number 10 is not fully comprehending your financial statements. It really could put you out of business without you seeing the oncoming train. You need to monitor your profit and your cash flow. Cash basis accounting is really just bad information. A lot of businesses are doing cash basis accounting, but it really does not give you very good insight into your business about what's actually happening. You really should be on accrual basis accounting. It means you also have to separately monitor your cash balance, but you don't have enough information to really see what's happening in the business, see what's going on and understand and make sense, be able to do ratios and follow unless you're on accrual basis. You also need to have a strong balance sheet. That could really be your life preserver and help you weather the storms. The companies that went under, there were some big public companies that went under early on in the pandemic. I think JCPenney's was one. I forget the others now. A few years ago, it was more top of mind, but there were several large companies that were publicly traded that went out of business very quickly. They did not have a strong balance sheet. They couldn't weather that dip in sales, anything going wrong, one big thing, and they were out of luck. If you have a strong balance sheet in your company, it really can be the life preserver when some unexpected stuff happens, like the pandemic. So you want to be prepared and not live really close to the bone so that you can weather the storms when they come along. Not addressing this problem is going to cost you money, and it could put you out of business, as the big guys, as JCPenney's found out. So it's really important to fully comprehend and understand your financial statements and what they are telling you. So here's an overview of what the 10 problems are. If you want, this is a good screen capture to take. I'll leave it up here for a minute. These are the 10 problems that we went through today. I've seen them at least in a few places in several of the companies that I've worked with. And that's why I've pulled them together. And it really can be, it can really catch business owners by surprise and they don't know what's happening.
Yeah, I just wanted to share a quick story, and not a specific story, but excuse me, as a banker, it was surprising. I was a banker for 15 years, and probably more than a dozen times I was the person that helped somebody understand that they had a problem. Either somebody was stealing or you're misrepresenting your interest expense, a lot of those things that you've brought up today. Just because of my own awareness and comprehension, frankly, of financial statements. That was the bulk of my training as a banker.
Mm-hmm. Yep.
Have you got a little bit more content?
Just a couple more slides, almost
cool,
done.
Great. Okay.
So I just want to say there's even more problems that are lurking in the shadows. It's just a sampling that I've got here. You can't be an expert at everything. So really focus on delivering the services and products to your customers is what you do best. And then hire experts to help you navigate everything else. There's no need to go into it blind when there is help available. And here's a QR code that can take you to my website. I'm here to help. I am a fractional CFO. You can subscribe to my monthly newsletter at my website, huxleycpa.com. You can follow me on LinkedIn. I post a lot of tidbits of information on LinkedIn as well. And I'm happy to have a a 30-minute consultation with anybody. There's no charge, that's free. And you can find that link on my website, or you can follow the website that's listed there to book time with me. Thank you very much for letting me present to you, and I'm happy to answer any other questions that we have.
Awesome. Well, I see one hand raised. I did see a chat from Becky that said Geneve is amazing. And so you've got at least one fan in the industry. Becky is owner of both a bookkeeping business as well as an academy.
Yes. And Becky is one of the bookkeepers that I trust to do accounting properly. By the way, I test my bookkeepers before I'm willing to refer them to make sure that they understand accounting, and Becky passed my test. So she gets a pass from me, and I recommend her regularly. So she's a great one.
And maybe Alicia, were you just clapping, not raising your hand? Is that true?
I think that was the sound of my typing as I was taking a note. I just wanted to say thank you for your time. And I work for the city of Fort Collins with the Entrepreneurship Center and offering some services. So I'd love to connect with you about hiring you to do some collaborative work for us for sure. So I'll put my information in the chat. I was just typing to you. So thank you, Kurt, for having us as well. This was a great session. Great.
Thank you. I'm glad you found it helpful.
Well, thanks, Geneve. If there isn't other questions, I'd certainly like to entertain them if there are, but I haven't seen any other ones pop up yet. I would mention to those attending, I just put it in the chat, the next LOCO event, which is a free think. So that's basically a free sample of what we do in our LOCO think tank chapters that meet around the region. And I think one thing I would add to Geneve's presentation is, as the owner, yes, it's really smart to hire experts, and part of your responsibility is to learn about financial statements and learn about margins and learn about leverage and learn about, you can't just rely on a good bookkeeper and a good CFO, although that's great, that's the starting place, but it's your responsibility to build your skill and knowledge of this over time.
Yes, I completely agree. And actually educating my business owners, my clients, is a big thing I do with my clients, because I don't want to always be the only one with the answers for them. I want to educate them to understand their numbers better, get more comfortable with their numbers, understand what's going on. That's a big part of what I do. I completely agree, Kurt.
Well, and as you know your numbers better, you'll understand better which things to do more of, which things to do less of, because you're just guessing from the CFO seat, but they're in the business every day and see new opportunities, sometimes where they're not actually existent.
Yep.
Any last questions for Geneve? We might give you guys 5 minutes back to your day here, if not. Well, thanks again. I really appreciate everybody taking time to be part of this webinar, and we will send the recording out if you want to circle back. Obviously, the Geneve's contact information there, you can book time. I don't know if you want to put that back up on the screen for a moment. Let somebody take a picture or scan that QR code, and then we'll just wish you guys a happy Wednesday and the rest of your week, and reach out to Geneve, reach out to me if you need any general business community connections, because I know lots of peeps, and happy to make connections where we can. So thanks again. Bye. Have a great.
Thank you.
Thanks, everybody. Bye-bye.
Bye-bye.